Hi and welcome to the Market Alert for Friday the 30th of April 2021. So stocks spooked as Treasury yields surge once more. The Fed will allow the market forces to take yields to higher levels, and it's saying here to 2.25 before stepping in. Well, that will be interesting if it does. It'll certainly send the stock market to the downside. Robobank says Powell is fiddling while Rome burns. Markets are on fire and soon prices will be too. And then what? Well, it will again be an interesting one. More doom and gloom. We're on an economic cliff. People are losing confidence in the economic management. People are less likely to hold US dollars, so more dollar weakness there. And again, back to inflation. One bank warns soaring food prices will lead to social unrest. This trend of higher food prices leading to social unrest extends far back into history and surrounds many key turning points in civilization as well. So again, it's plain to see what's going on if you have a look. Now, interestingly enough, on the stock market, even though it fell out of bed yesterday, the Plunge protection team came in and brought the market back, and thereby moving the implied volatility to the downside, irrespective of how big the fall was in the first part of the Dow's trading session there. So, interesting again. So, looks like, as JP Morgan said yesterday, buy the dips. On an intraday basis, that was certainly the case yesterday. I'll just show you this so that you can see it. This is the Dow. You can see we're down 100, 200, 250 points down to the low, and then we're back up 100, 200, 300 points before the close, thanks to central banks and the Plunge protection team there moving prices to the upside. So let's have a look at, let's just have a look at the yields. Jumping around a bit here this morning. Apologies for that, but just trying to remember everything that I wanted to cover. There you can see yesterday the yield spiking or getting close back to that 1.7 area. So keep an eye on this once more. Today's news, well, it's just European news. We've got the German prelim. This is out at 9 a.m. and that's it. So the market's going to have to make its own mind up in which direction it is going to trade. So if we start off with the Dow, let's just pick up the daily chart. So again, you can see we're in this sideways range still. Yesterday managing to come back above the previous day's high, Wednesday's high, but not looking good overnight, is it? We've got weakness already in the Dow. If we just have again look at the 5-minute, bring this over, you'll see that we're coming off the highs already, down nearly 100 points as well between the two blue lines there, and just gone through the 200 MA in the 5-minute chart as well. So the Dow looking weak already. A lot of volatility overnight as well, 100-point move already. So let's have a look at the DAX, see what we've got in this. Also looking weaker as well. We're through the 20-bar moving average yesterday. We can see there's an increase in selling. And also back through the 78% retracement from this low to this high. So anything through the 89 is again going to retest yesterday's low. Market stopping at the low that we had last week on the 21st of April. You can see there coming down to this. So if we take out yesterday's low, we're not only taking out Thursday's low, we're also taking out the 21st of July low. April low there as well. So watch the 15,074, very important level, because if we take this out, just get rid of this, let's have a look to the left, then we are going into some serious territory on the downside. And interestingly enough, we've got, let me just get rid of these 78s at the moment, and all of this. Let's just redraw those fibs and have a look, see how it ties in. So interestingly enough, 38% retracement from this low to this high is also the 21st low and yesterday, another reason why the market came off this point. So a breakthrough here will send us down to 14,000, 15,000 area there, bar 4 points. Just checking that. So it's going to be interesting if the market can't hold that level there, 15,097. 15,100 would be the area. If you have a look in the 2 minute, 15,100 is just down here. 15,099 is what we were looking at, wasn't it? Let me just double check that. Yeah, 15,097. Yeah, so this area here is very important, and as I say, watch this low, very important low for today. The market will need to stay above this. Yeah, that's as far as that's concerned. So let's just have a look at, just in case they come in and move the market to the upside and drive prices higher from the start. So we've got a long way back up to 200 points back up to yesterday's high. Well, 225 points. But like I say, for me, watch that low, because otherwise we're heading down to the S1, S2, and possibly S3 as well. Let's have a look at the metals. Came into a bit of a hammering yesterday. Unbelievable what they're doing in the silver market. Again, it was sideways yesterday, but they slammed the price down. If you have a look at the 15-minute chart, you can see this clearly. What they did, slam the price down, and then it was brought back before the end of the session. But at the moment, the market once again struggling. Got a bit of a retracement there overnight from this low to this high. You'll see prices back to 89%, and just picking up some buying in this area. But it's amazing, blatant, absolutely blatant what they're doing in this market, and are allowed to do it. They're allowed to do it. Simple and effective in doing this when they want to roll over the contracts or they expire. They just slam the price so they can buy it back cheaper, so they're not exposed. Amazing. And so undervalued as well, which is another thing that never ceases to amaze me. Meanwhile, in the dollar, this finding a bit of support yesterday and sideways to higher, back at that 78% retracement. Needs to close below this if we are to move lower to the 89, and then also the recent low to be retested. But certainly a lot of volume in this one at the moment, picking up there as it rolled over from the March to the June contract. And gold also struggling a bit there yesterday. You can see what they did there. Look at that huge volume, and looking a bit weak also on the overnight at the moment. Criminals, absolute bloody criminals. But the CTFC seem to just turn a blind eye to what they're doing, and they've done it for years now, years. And the reason is quite simple. If the silver price is starting to move up, it's a monetary metal as well as an industrial metal, and it starts to raise alarm bells, and that's why they're suppressing the price until they get on the long side, of course, and then it will be a different ball game completely, and there'll be no stopping it moving to the upside as they make billions out of it. So yesterday's activity, let's just go back to the pre-market. The futures market opening above the 200 MA and trading sideways, moving to the upside there. And then as soon as the cash market opened, we were traded straight down to the DP level. They brought the market back to the close in the 200 MA, then down to the DP with a bit of demand there, buying pressure, and then they continued just to move lower. But notice no prices are closing above the 5-bar moving average. Very simple but very effective. That's the first sign of any support coming into the market before prices are slammed back down to the S1 and then start to move back to the upside. Notice this bar here, as prices retrace, the volume in this bar is greater than the previous 2 bars, and this then adds to the downside pressure. The market then says, okay, we've got rid of the selling. We can see this with the volume dropping off, then get a potential buy signal. The market trades back up to the scalp and to the DP, and manages just to break through. We've got at this point here, you can see that we've got very high volume, narrow range, sitting at the DP. Any close back will send the market to the downside, and that's what happened, and that's the game plan all the way back down 50 points before the market found any support for the morning session. Now in the afternoon it was interesting because the market traded down to the low, sorry, not in the afternoon session, but after the 10 a.m. I forgot I'd actually extended the recording on this. And you'll see prices sitting on that low. And again, this is why the low is so important. You'll see the market testing this area on many occasions. Then mid-morning prices managing to hold. This is now just as the market opens for the afternoon session. You can see we're still at the low. They kept bringing the market back. Crucial area, but the Dow just hit the fan. And the DAX just followed suit. Again, notice how many times the market, there I'm looking at the daily chart just to see where we are. We're at 78% from this low to this high. So any close below this, we then move down to this low, to this high to draw in the retracements. But you can see how, again, that 5 bar moving average, how prices, even if they trade back through, close back through, then continuing to the downside. And that was the theme yesterday afternoon. I was just looking for places to re-enter as they came back, and managed to pick up 60 points in the down move yesterday. And it was here as the market came up and then turned south, and then closing back below the 5 bar moving average, taking this to the downside. The momentum was clearly to the downside, and until you get some sort of climatic action in the prices, they'll continue to the downside. And I was speaking to a friend at this point and saying what we need is a bar that will trade lower than the previous bar, come back and close above the previous bar as well. And you'll see that bar being formed here. This is the bar I was talking about, and as we spoke of it, it started to happen. And again, we can see that we're already getting the increase in volume here, but the brakes being put on in the market for this reason. Markets move lower. I'm having a look at the daily chart just to see, and then they bring the market back. And this is the sort of price action I'm talking about, where it sticks out like a sore thumb. The market is lower than the previous bar's low, but then comes all the way back, and on this occasion sitting above the 5 bar and the psychological level there as well. Prices then trade sideways and then start to move back to the upside there, coming back over 50 points. So that sort of price action is what you want to look for when the market is bottoming. You want to see a bit more volume actually. I was hoping there'd be a bit more. Normally you get a huge amount of volume on that type of bar, but the price action alone was indicative of the market stopping and then finding support. Okay, and also, of course, at this point in time, it's when the plunge protection team, find the Dow again and just go back, it'll be when the plunge protection team were coming into the market. Again, you can see that climatic action there in the Dow as prices plunge down, get people to go short, and then they reverse the market back to the upside. Okay, that will do it for this one. Enjoy the weekend, and let's see what happens today in the market. And just before we close, actually, I've just had a thought. Let's just see what the market is currently doing for anywhere near the low. No, we're just sideways at the moment, but do watch this low today. Okay, that's it. As ever, thanks for watching. See you in the next one.